I got the strawberry ones. Good. Treat others the way they want to be treated. Yeah, that's good, right? That's good, Ken.
Don't apply that around cannibals, though.
That is true, right? You end up in a stew pot.
Yeah.
Can you imagine? That's why I never go. I got three things. I like going to the beach, right? But there's three things I don't do at the beach. I don't wear jewelry when I'm in the ocean. You see this? New. That's a fishing lure to a shark, people. You don't wear shiny crap while you're in that ocean. Second thing, never pee in the ocean. I know you say, oh man, everybody pees in the ocean, man. It's a big ocean, right? No, that's like throwing chum out in the water, in my opinion. Now, I've never been attacked by a shark, which tells you that I'm doing something right. So if you're going to pee, then, leave the beach, go somewhere else to do it, or, just while you're sitting in your chair, just let her fly, right? I mean, nobody's going to notice. But don't do that while you're in the ocean. The third thing, this is important when you're a man of my size, never, ever, God forbid, wear black in the ocean. You understand what I'm saying? Because Mr. Great White sees me wearing black, he goes, friend, it is Thanksgiving dinner, because I look like a seal. So I never wear black or dark color when I'm in, no, heck no. I am not going to be, a seal in a shark's mouth. And y'all, I'm 50 years old and I've never been attacked by sharks. So I think my three rules are working pretty good. All right, so where we're going to go today. Y'all going to like this. I'm going to blow your mind. Now, I threw the kitchen sink at this in our evaluation. And so y'all, you just kind of calm down. Matt, I'm scared to show you this one. Matt, are you okay today? Oh, Matt, tell everybody about your first trigger, if you don't mind. If you can talk, if you're not taking a safety course.
I finished that this morning. Fuel cell triggered a buy yesterday, and it almost triggered another buy today.
Isn't that cool? So that tells us that
Just
the price,
waiting on the day that it goes to
yeah.
trigger a sell.
And it's kind of neat when you open up your spreadsheet and all of a sudden it says, hey, sell or buy, or, and it tells you the exact number of shares to do. So it's kind of cool, right? When you open it up and you do things. So y'all know me in spreadsheets. Now, I don't know how to do the simple things. Matt's always telling me how to, copy sales here, copy sales here. But I do this weird and unbelievable kind of garbage with spreadsheets. And we'll go over it today. I just don't want to blow your mind. Okay, I just don't want to blow your mind too much. Where's my dang pointer? My dang pointer. Here we go. We'll get it up. And it's good to have you back. And we'll get together and make sure we go through everything so you know exactly what we're doing. Rule 4, never wear a Speedo after 25. Let me tell you something. I should have worn a Speedo before 25. I've always had this problem, but I'm doing well, right? Now, remember yesterday, I'm like, hey, dude, let's keep this simple so Beth can run it after I die. And what do? I do what I always do. I overly complicate things. But I wanted to throw the kitchen sink out here with every possible thing I could think of. And then we'll pare it down and make it into something useful, right, that Beth can use or that you guys can use. And we'll just see what's important, because there is some data entry with what I've done here. Now, there may be a way to have this come in from, Trading View or something. So we'll figure it out. We'll make this simple. I don't want it to be complicated on anybody. But yesterday we were talking about going with the hot hand, right? We were talking about, let's stick with the stocks that are doing best. And I had it on the best in the 5-day, right? What are those overperforming stocks? Those are the ones that we should give the ball to. So if who's your favorite running back? Franco Harris. That dates me a lot, right? If Franco Harris, man, if he's on fire, feed the boy the ball. Feed the boy the ball. And what we looked at is on different time frames of these 10 that I have. Now, you change your symbols to whatever 10 you want it to be, but I like having a basket of different underlines that I can do. And I said, okay, well, let's feed the ball to the running back that is on fire right now. So if he's on fire, is this thing updating? Maybe kind of, sort of not. Maybe not. Let's see. Unbelievable. Hold on. Let me close this one. If I can get this working. But you got to figure out your time frame, right? What are you going with? You going to making your adjustments weekly? Well, then maybe you look at a weekly and a monthly chart. If you're going to make them monthly, maybe you look at a monthly and a 3-month chart or in a 6-month chart, whatever you want to look at. So I thought it was cool to let's look at who's running the ball, right? So we see this little tiny line here with the candles. That's SPY, right? That's the SPY, and then you see the TQQQs. Oh, unbelievable! Hold on a second. Let me open up a new one. I didn't have time to get all my stuff done before, since I had that meeting. Let's see if I can get into Trading View on another thing where you can see my access denied. Unbelievable. All right, here we go. Charts. See if it'll show my chart. Here we go. All right, so you guys can see this. My head's swimming, man. Come on, open it up. All right, here we go. So this is the chart. Let me open all this stuff up. Let's hide the EMA 20. Matter of fact, I'm gonna take all that garbage out. I'm gonna take that out. Take that out, and then let's come up with our comparison. I'm even gonna take the 200-day out, and I'll show you why in a minute. All right, so here's our chart of SPY. Let's do SPY. So we can see how SPY is doing, right? And we know we always look at linear regression. Now here's where it got good yesterday after I left y'all, because I was going to the phone. So now let's add the comparison lines of our 10 other securities, our ultra movers here, to see how they're doing. And surely there's a way I can share this chart with y'all if y'all want it, but if you don't want it, it's just a comparison chart, right? So you just hit compare, you just hit all your stuff in there. So I've got all 10 of my stuff in comparison to SPY. So if we go and we look at it on the hot hand, right? Who's running the ball well right now? Here we go. So we got the TQQQ, UPRO, and all those, and it tells you over to the right what their percentage returns are in comparison to what the SPY is doing. So the SPY is up 1.45% over the last 5 days. But look, the TQQQ, man, is 7.55%. So then let's look at it over a monthly view. Let's see who's carrying the ball for a monthly view. Who's in charge? Still, TQQQ, baby, is still running, right? UPRO's doing good, UDAO, and you've got everybody's performance over here to the right. So let's go to a 3-month chart and see who's really killing it. Well, look at this, y'all. Over the last 3 months, hey, UCO, which I think that's the oil something, it's got it's done well over the last 3 months. So, TQQQ is, it's a recent runner. But it's still in the top 4, right? So that's a good way to see how each one of these items are doing. Now, Matt, what you would do is you would do SPY, and then you would compare, fuel cell to this. So that would be one of your 10 that you would be comparing. So let's go back now, and again, I don't want to scare anybody. I threw the kitchen sink at this thing yesterday. So originally, what I had was the beta of all of our items, right? So we took the beta, and this little system really does well with the beta of a stock. So I used this little data stocks to be able to pull in all of this information for my 10. So that's why I got these cute little, Wall Street looking things. I used this stock thing. I can go over how I did that. And then once you do that and type in the symbols, it'll convert this. Then all you got to do is go over to the right and go equals A2 and then point beta. And it also shows you all the other cool stuff that you can pull in from, wherever it's pulling it online to give you the beta of all of these 10 things. So, theoretically, the 10 items the higher the beta, the better it should do in the system, because we want things that move. So the beta of SPY is 1. We would expect UPRO to be 3. Let's see, where's UPRO? 3.19, right? It moves 3 times the amount that the SPY does. Now, so in our evaluation of these 10 underlyings, what weight do you want to put on that? Okay, So I said that if I'm going to weight 10 different factors and they all equal to 100%, then I'm going to put, I think that's pretty important. So I put a 15% weight on beta. So if anyone's lost now, I understand because I'm not the best one to explain it. So I have basically said, I want to give out of 100, I'm going to give 15% to what the stock's beta is on whether we should allocate more resources in our account to that. Okay. And I did that by doing a ranking. Right. So the highest ranking one is AGQ right now. So you see the 3.56 is higher than the other one. And I just did a percent rank and had all of these rankings. So then based on this beta rank, I gave a 15% weight to it. And when you have this spreadsheet, you can change that weight to whatever you want. If you go, Bobby, boy, that Bobby sucks. He has no idea. Beta doesn't matter when I'm selecting a stock. Or you'll say, Bobby is not allocating enough. That should be at least 25%, a quarter of the entire weight. Okay. So then I did the 5-day return that we showed you in the chart a while ago. I did the 1-month return percentage, and I did the 3-month return. Now, if you don't want all that garbage, take it out. So what I then did is say, okay, on the 5-day return, that's, the longer the return, 3 months, that trend is established, right? So I put a little more weight on a 3-month return. I weighted 10% on the 1-month return, and I only put 8% weighting on a 5-day return. Okay. So what was the 5-day return? I did that number that I pulled from this chart. So I went to 5 days, and it will have changed today. And I basically just typed in the percentage of each one of these, right? I typed that in over here. And I did the same thing for the 1 month and for the 3 month. You don't want to do all that? Take it out. You ain't got to, you don't have to do either one of them. Or, just weight that to 0 and just leave it like it is, and it won't take it into consideration. That way you don't have to change the spreadsheet at all. So I took the 5-day returns and I did the same thing. I did a percent rank of these returns. So the highest one was TQQQ, right? It was in the 91st percentile, so to speak. So I ranked these things, okay? Then I did the 1-month return. You see where I got that information. And I did the same thing. I did a ranking, a percent rank of all of those. Again, check it out. The highest was TQQQ. So it was highest both for the 1 month and for the 1 month and the 5-day. So then I did a 3-month return that I got from the chart. Did the same thing. I ranked all of those. So which one was the highest over 3 months? It's our friend UCO. And I gave it a higher ranking, right? 3-month return gets a higher because I thought, well, it's more established, right? It's not just a 1 week scenario. You could change these. You could make that a 12%, that a 10%, and that an 8%. If you say, I'm giving more weight to the shorter term return rather than the long term, okay? Now, then I kept this in here, which kind of maybe gives the 5-day outperform a little more, weighting. And the 5-day outperform, I gave a 5% nod in the weighting to it. So basically, did it outperform SPY in the last 5 days? So not only do I have it given some consideration here, but I also give some consideration to whether it was a yes or no. If it outperformed SPY in the last 4 days, then I gave it a weighting of, let's go to variables. Let's see. Linear regression, big green monster. I got it all in here. Again, I threw the kitchen sink at it. So 5-day outperform. If it's yes, I awarded it a 1. If it's no, I awarded it a 0.75. Now you can change that. You can say, hey man, that's an important thing. So I'm gonna give it a 1 if that puppy outperformed in the 5 days, and I'm gonna give that a 0 if it did. Okay, so you can make those spreads as wide as you want to. Let's go back to the allocation tab. Then I basically converted that. So if it's a yes, it gets 100%. If it's a no, it gets a 75%. So I thought rather than you having to type that into the formula, I would just give you a place here where you could tinker with your variables. Okay. Then y'all gonna love this. I said, what is the greatest thing that you and I together have done? And to me, the Big Green Monster is a monster of what we've done together. It's amazing how those levels work, right? So this is UMDD. So yesterday I went and drew Big Green Monsters on everything. So let's go UMDD and just look at it. I drew Big Green Monsters on them all. So basically I'm saying, hey, where is it in the scheme of things? And UMDD right now in our chart is in the fair market value. So I went back to the spreadsheet. Yesterday, when I looked at it, it was overbought. So now it's in the fair value, right? So notice by going from overbought, it had a 25% awarded to it, because if it's overbought, what do I think that's going to do? I think it's going to go down. So I'm not going to allocate as much resources to it. If it's oversold, I'm going to allocate more resources to it, because in an under oversold condition, it's going to go up. I believe it's going to go up, right? If it's oversold, it's been sold off too much, and we think that's going to go up. So it gets a 75 for oversold. It gets a 25% for overbought. What if it's in the fair value? I said, let's make that 50. You can change this, or you can do without it. But I thought, isn't it cool that if we put the Green Monster in our analysis, that it kind of, helps us to make a decision. So how much percent weight did I put on the Big Green Monster? I said, Big Green Monster, we like the Big Green Monster. Let's put 15% weight on that, which is equal to the beta. Right, so I put 15% on that. Then I go, what is another thing that you and I use to be able to tell trends if something's going up or down? Clearly, one of the best things that has worked for us, you've seen it in action, is is our linear regression. Where is my linear regression? Why aren't you showing it? Oh, there it is. You see it very, very vaguely, right? So let me hide all this other stuff. That so we can just look at our linear regression. Just make it easier for y'all to see. We got all our numbers, we got all our stuff. We'll go down here, we'll go down here. All right, so linear regression, and we've normally been looking at that on a 3-month chart. So be consistent, right? Yeah, choose one. You're going to look at it on a monthly. You're going to look at it in a 3-month. What do you give more weight to? I wouldn't do it on a 5-day. I would do it on maybe a monthly or 3-month, and be consistent on the time frame that you're looking at. But if you can see, that's SPY in it. So let's go to UMDD. UMDD for this period of time is clearly in an uptrend. Easy to see. So we go back to our spreadsheet and we go, okay, what's your weighting on linear regression? Do you think that's important or not very important? So I gave it a 5, right? I think our Green Monster is more important than that. You may disagree. So let's go and see what we did there. So linear regression is up. If linear regression is up, it awards it 75%. If it's down, if it's down, then, hey, we really don't necessarily need to add it, as much to our portfolio. So it weighs on the, on the percentage here. So in the event that it's pointing down, 25%. Now, what if it's sideways? If it's sideways, then it awards 50%. Where do you change all that? You make the decisions on how important things are. What values do you want to award up, sideways, or down? So I would say, if it's up, we want to award more. We want to reward it being up in our portfolio, right? So we'll allocate more. So do 0.75. You come up with these numbers yourself, and the spreadsheet will automatically update for you. Now, a couple things else that I use, and you don't have to use these. You can take it out or award 0% to it. But I like looking at the 20 EMA, the 50 EMA, and the 200 SMA. And then I said, hey, is it above or below the 20 exponential moving average? And I awarded that a 0.5 and a 0.25. Now, the 50 is a more significant level, isn't it, than the 20? So I said, man, if it's above that one, it ought to be rewarded more, and it should be punished more if it's below its 50 as far as our allocation. Then I said, the big granddaddy that a lot of people look at is this. Is it above the 20 simple moving average, or is it below the 200 simple moving average? So I punish it if it's below. I reward it more than the other two if it's above. Again, you change these levels, you don't use it, whatever you did. In other words, what I did is I threw the kitchen sink at this and said, look, I built it to where you can add anything. Now, if there's something else that you like to use, for example, you like to use RSI, well, you can add it, right? You can just take out one of these and say, man, if the RSI is at this level, then I'm going to award that underlying this. If it's below that level, I'll punish it, okay? So you can change these up any way you want. And then I said, as far as the weighting of all of that, I awarded different weights, right? The 20 is not as significant to me as the 50. So I awarded 10 for the 50. And if it's below the 200, then that's a big deal, right? That's equal to the green monster and it's equal to the beta. So if this ended up being below its 200 simple moving average, then that's going to be punished for it. If it's above it, it's going to be rightly rewarded because it's in a bullish state. So y'all, what I did is threw the dang kitchen sink at it. Now let me show you the easiest place. Most of y'all are using Thinkorswim for your big green monsters, right? The best place for you to go in and add your 20 exponential, your 50 exponential, and your 200 simple are right here. Bobby, I don't want to use an exponential. Then don't use an exponential. Use a simple. Use a simple, a simple, and a simple. You know, mix them up however you want to do it. So right now, this UMDD is probably different when I did it yesterday. It was up here, right? So it's moved into fair value. Now it is below its 20 exponential average, but it's above this, the 50, right? And it's above this. So, you know, let all of that, you know, come into your calculation. And remember, be consistent. I don't care what time frame you use, but on the green monster, we use 30 minutes, right? And this is over the last 10 days that we're looking at it on volume profile. So just add these moving indicators. And if anyone has any idea how to do that, it's easy, right? So you go over here, you just go simple, moving average. There she is. You want a exponential moving average, AVG exponential, right there. And then you simply go in. Let's make sure everybody knows how to do that. You know, change the length to 200. Then I don't show anything on an up signal, so I uncheck all of that. I don't do anything on the down signal, uncheck all that. And then make it, you know, as wide as you want it. If you want it really wide, you know, change your colors there. All right, so let's go back, show you what we've done. So there it is. There's our 200, clearly above, but it's below the 20. This is UMDD, so let's make that change on our chart. So UMDD, it's in the fair value range. I can imagine me showing this to Beth and her going, okay, you made it simpler? Yeah, you idiot. So it's now below the 20 EMA, right? So it's above that, above that. So let's go over and look at it. Okay, so basically it does all of this calculations. And what I would do is, you know, hide most of this garbage, right? You don't need to see the converted and this converted, as long as you know your formulas in there, right? So we'll hide all this. I just wanted you to see the guts behind the calculations. All right. So then what it does is it gives it an overall score, right? It's kind of cool. It gives you a score of each of your 10 underlines. That's kind of cool. So based on how high it scores, this thing is going to determine the portfolio allocation that this should have in your account. So based on everything that we've done, there are two that are really saying, buy me, buy me, buy me. And that is UDAL and the TQQQ. No surprise, right? The highest one that we get is the TQQQ. And the spreadsheet will tell you the allocation of your portfolio that you should put into each one of those underlines. Well, that's a lot of math for you to do, right? So we'll hide this one, but I'll just want to show you today. So now it shows you how many shares to purchase and sell so that you will reach that, right percentage. So then if it's positive, it's telling you to buy. So buy on everything. And then I rounded the shares. You can't buy 0.16 shares. So in that one, you do nothing, right? You just do nothing. These tells you exactly what to do, right? So it's saying in your portfolio, you should buy 8 shares of UMDD. You should buy 7 shares of UBT. You do nothing on ULE, you're fine where you're at. Buy 1 share of that, buy 3 shares of that, 15 shares of that, 19 shares of UCO, buy 11 shares of. So the cool thing is, if we could ever, and I think we can, to get all of this stuff to import on these SMAs and all of that, I mean, this could be automated so Beth could run it. But I can tell you this, Beth ain't coming in here and drawing big green monsters. I mean, she's just not going to do that. So, I got to figure out a way that we can, do this without Beth having to do big green monsters, because I've weighted it as a 15%, weight, right? So it's pretty important. So I'll come up with a way to simplify that for Beth. So how do you get portfolio beta? Tastyworks. No, actually, Ken, the cool thing is, it pulls in beta by using this little function right here. Let me show you.
Oh, you get it from TOS, right?
No, it's not even bringing it from TOS. It's something that's built into Excel. And it's called.
Oh, okay.
Yeah, it's this little thing right here. So if you'll just start typing your symbols out, type your 10 symbols or 5 symbols or whatever you have, and then highlight them and hit stops.
Then, that doesn't work for me. I understand that. I don't have Office 365.
Oh, I got you. Well, we can, then we can figure out a way for you to pull in beta, and I think you could do it from Thinkorswim.
You can. So,
you can pull in the beta from there. If you have this though on your, I think it was really neat because you can pull up a lot of stuff. Let's see if I can do this. Let's go.
I own Office 19, and it won't do that. But if you have a subscription to 365, it'll do that.
Look at all the stuff you can bring up here, guys. I just want to show you 52-week high, 52-week low. There's the beta, change percentage, currency exchange. I mean, it's got a lot of stuff, right? That you can bring in the price, extended hour price, ticker symbol, volume average. It's kind of a cool little deal. I like it. So beta was one of them. So I said, oh, heck yeah, we'll use it. And it made them look really nice over here on the side. Gave it the little Wall Street building, I don't know. It's kind of a cool thing. So it pulls that in. You can pull in price. You can pull in all kind of stuff using that if you don't want to have to keep your Thinkorswim open. So very good. Let's see, Bobby, I would like this spreadsheet. I have studies apply to. Okay, awesome. Yeah. So that is, and this is why it's cool. And I'll make sure if you have any problem, set it up to what you believe. So example, you could throw out all of this garbage that I have. You could put in RSI. You could put in what's some other stochastic slow, stochastic fast, whatever your signal or indicator is. And then you say, man, I'm going to weight it because I believe that the slow stochastics is the, that's the stuff. Right? I'm going to put 30% weighting on that. So that means everything else will be weighted, 70%. So that gives you a lot of leeway to say, man, I can fix this thing to recommend my allocation for any technical indicator, anything that you want. And trust me, it's not as complicated as it looks. I hope Matt's not driving right now and, going off the road or something going, oh my God, my head hurts. It's not as complicated. You can take out as much stuff as you want. You put in, if you want more stuff, you say, man, I'm going to keep everything Bobby's got and I'm going to put in 20 more. Well, you can do that. It's really easy, right? And if you want to put something in your own indicator that you think is awesome and you need help with that, and then schedule a one-on-one with me and we'll get that built for you, right? But man, it is cool now. Now I got to test it, right? I only tested it with one to make, I just finished this before I was in that meeting a while ago, not listening to what everybody was saying. I was actually working on this, and this one actually worked, right? It looks like currently this would be 7% of my portfolio stock. And what I did basically is I should probably put this 0.8 somewhere on the variables page, but let's go through the formula a little bit. What you're doing is saying, okay, you should take the percentage that it's saying, multiply that by 0.8. What is the 0.8? Well, in my situation, I'm keeping 80% in underlyings and 20% in cash. So Matt, if you're doing a 50-50, and I need to update it, or you can do it on the variable so you don't have to go into the formulas and do that. I'll do that. So that if you want to keep a 50-50 allocation, then that number would be 0.5, right? If you're keeping 75% in stocks, 25% in cash, then that number would be 0.75. So that's what I'm doing in these formulas, right? And I'll fix that to where you can tell it what your cash allocation and what your stock allocation is going to be. I've got it automatically set to an 80-20, which would give you a wrong figure if you're keeping, 50-50. So I threw the kitchen sink at it. I think, Ken, you're exactly right. You can put if there's some indicators you want to put in here, do it. Do it. And y'all don't be fearful of it. I mean, I'm not going to sit here and tell you that stochastics or RSI or anything is good or bad, right? You guys have traded different things and you know what's successful for you. So this was just kind of a, late last night, I'm sitting here just saying, what should I weight these? I kind of want it to equal 100%. You can make it equal over 100% if you wanted to, but, I thought 100% with those 10 would be good. You want to weight them all equal, give them all 10%, right? You got 10 different things there. So just play with it. So I will get the spreadsheet out to you guys today so that y'all can play with this. But first, any questions? I'm worried about D coming in. D's probably like, what in the crap have I stumbled into, right? This is totally different than what y'all were doing before. We're still doing what we're doing before. It's just that we're adding something that's a little neat. And D, we got this. What's the name of the book? Roger, what's his name? Lucello. A little strategy he calls AIM, and a book that is on Amazon, which is the cheesiest name, and I'm even embarrassed to say the name of the book because you go, oh my God, you jumped off the deep end. What's the name of the book? How to Make $1 Million in the Stock Market Automatically, which is the cheesiest. Oh, it just scares me. Matter of fact, I put it on Facebook the other day, just to my friends, I said, y'all, let me tell you something. If you want to read a good book, I said, it gives you some wise things about investing, here it is. And then I got embarrassed. I was like, oh, they're going to think that, I don't know what I thought they think. I thought, man, I cannot recommend that book to everybody. They'll think I'm I don't know what they think. So I even took my post down because I don't want people laughing at me. It's that cheesy of a book. How to Make $1 Million in the Stock Market automatically. And then we just go and just complicate the crap out of it. I can't wait to show Beth this spreadsheet. Say, now here, honeys, what you got to do. You got to draw a big green monster. You only do it once a month, though, right? And, oh, boy, she's going to love that. So I got to fix that for Beth. All right, who's got questions? Rick, I know you got a question.
No, I don't have any questions, Bobby. This is a lot to take in, to be honest with you, for me at least. because I would like to do this on a part of my account rather than a whole account. So this is very interesting. I'll have to get it and look at it. Yeah, I'm not sure what uh, what data I would use to put in, but the fact that you put everything in there allows us the ability to tweak it the way it works for us. So I appreciate that.
Yeah, yeah, and you don't have to do this to 100% of your count, right? You can just say, I'm going to allocate a portion to it. See how this works. Uh, Now, Ken, you've read the book. What I got to think about is when you're making this type of adjustment. Number one, I don't even know if we're going to need portfolio control and all of those numbers that he had before. Probably still need safe, but I'm thinking that I don't know. I got to figure out how it affects that portfolio control because I want to keep that in place, while we're doing this. So there's a lot of testing that's got to be done. There's not, I mean, I won't say that,
The
this,
purpose behind the portfolio control is to avoid doing something that's really common. I got caught in this myself when I was doing uh, when I was doing the wheel strategy with the leaps, and I was doing it with the Palantir, and it was going up like skyrockets. So I started rolling my short-term calls because I get blown out of the water. I go into the money, and I fixed that problem later by doing ratioed. I ratioed my short calls to the leaps so that I never got caught. But before I did that, I rolled, and what happened was I was rolling myself into losses because I had no true idea of what the consequences of the roll was. Now, in this case, when we're buying in or selling the stocks, essentially our basis moves up and down, and the portfolio control tells us where that is. So if you may find yourself uh, selling off at a loss because you didn't, because that's what that portfolio control is. It tells you you can't do this action now because it would be a gross loss to the whole portfolio. Read the uh, read the book again, Cello's book. He explains why that's important, and it's and but I agree with you. Intuitively, I want to look at that and say, do we really need it? Perhaps it's somewhere else. Perhaps our way of thinking now with Excel spreadsheets and computers, we may find something better. I do question it, but it's got a fundamental purpose in the AIM strategy of how we keep track of what what money we put on the table, so to speak.
so what do you think about the merit of this type of thinking? What's your thoughts? You're a
Uh,
long-term trader.
well, I'm not I'm not a traditional TA guy, so this is probably it's good for me to answer this because most of I don't believe in like the f of y equals f of x. I don't believe that you can use price to predict price. So so that's a limit to TA, but it does help smooth things out. It does keep our eyes and other people pay attention to it. The number one TA that I use, number two TA I use is it above or below the 200-day moving average? Because the big funds, the big ships that buy millions and millions of shares, that's one of their benchmarks for uh, market bias. If it's above the 200-day, they start buying in. If it's below, they start getting out. So that's an important one. The other one I like, and it's one you don't have, and that's you know how they do the volatility ranking over. I would do 52-day high and low. I'd like to know what percentage from the 52-day low is the stock price today relative to the 52-day high. And that tells me how bad the stock may have been beaten down or how close it is to tops. I mean, there are rules. There's a good rule. You buy stocks that are breaking their 52-day or 52-week highs because that means they're strong bullish stocks. And then on the other hand, if you got a good quality stock, you want to pick it up low as you can for it has more room to grow. So that's my two biggies right there. I say the 52-week high-low index and the 200-day moving. Those are the two that I would look at the most. I like what you've got here, and it gives things a weight. Because some things are more important than others.
Yeah,
And
and the cool thing is that all of us, can agree to disagree on it, right? So
yeah,
if you disagree with something, well, you put your money where your mouth is. You can change any of these to any value. If you say, man, that Ken doesn't know what he's talking about with 200 SMA, I'm gonna give that a 2%. Then that's fine, right? Now, what we could do, Ken, is and I don't know how interesting this will be to everybody if y'all say, okay, that's a little, we could have a work session, right? So in one of our daily things, we could do a work session together and build in anything that y'all like, to you want to build something in, we can do that. So 52-day high, 52-day low, we could do that, put it in, with values. The cool thing is, I think that's one of our things that automatically pulls in if you got the thing, let's see, if I go equals A2, yeah, see, first two things, 52-week high, 52-week low. So if you have that, otherwise we can certainly pull that from TOS, but that makes it really easy to go in and pull that information there. Yeah. Anyone else got any question? Would that be something y'all don't want to do? I mean, I don't want to get too technical, but it'd be a lot of saying, well, how we do this formula. That might be good, right? You guys say, I'm a spreadsheet nerd that can't do the simple stuff. I do all this crazy, wacky, analysis. God only knows if it works. Now, here's the cool thing, y'all. What's this? Let me see where I got this. Buy dashboard. So this is kind of cool, right? AIM, how is our AIM portfolio doing versus the S&P 500, right? So if you look at the green, that's the AIM portfolio, and you see it has consistently generated alpha. Alpha meaning percentage above the S&P 500 until we had that little, what was it, a little down move or something. And keep in mind, all this new stuff that I'm showing you today, I have not implemented it at all. So I've not made, you go, yeah, Bobby, look at you. You just made that change and now you're underperforming the S&P 500. No, this is based on original AIM. I haven't updated the number today, but they're really performing quite close. Now, keep in mind that the SPY portfolio that you see here is 100% in the S&P, right? So this is 100% in the S&P. So that's outperforming us. In this particular portfolio, it's currently at 75% securities and 25% sitting in cash and cash equivalents. And we have used a couple of things as cash equivalents, which a lot of people say you're nuts for using that, but I'm using O and junk as cash equivalents.
Bobby, on that topic of doing cash equivalents, I had a bright idea, and I'm going to start looking at it. I was looking for a little diversity because I have I'm doing what you do. I got O. That's what I use as my cash equivalent. A 75-25 because I may need some cash, so I keep a little real cash. But then I got the bright idea. There are other high dividend paying fungible stocks that are pretty safe, and cash, a cash equivalent. So I was thinking of doing the AIM system as originally intended with my cash, and not so much looking to make big profits there, but I'm looking for stability. That's what I want there with those cash. I want stability, and I was thinking of putting up a separate AIM just for that kind of stock to see what would happen. And
yeah,
it's just a different class of stocks. I mean, I want the volatile ones in the main account to grow, but I need to guard my cash because you can get the big head and get full of hubris and thinking, oh, I'm king of the universe, and next thing you know, the market will humble you in a New York minute.
Don't we all know it, right? Just when you
Yeah.
think, right? Just when you think, hey man, I got this thing figured out. You're exactly right. That's the time it comes in and clubs you over the head. But I am pretty excited about this. I think we've taken something that's out there, we've updated it, we've kind of made it our own, and I am very open to, to your comments and to building this out in a way that is useful for anybody. Or you may say, Bobby, all this ain't crap. It's just, it's just crap. But I think allocating a percentage of your portfolio to this is really, really smart. And if you say, Bobby, you're the guinea pig, then I'm the guinea pig. We'll certainly try it out there and see how it goes. I would not be as eager to use this thing if, it was taking $10 of commission, to make these stock trades. That's stupid, right? I mean, you may make a quarterly adjustment or something, but now that you can move in and out of these things for no commission, man, that's been the greatest thing for a strategy such as this, because you just don't have any commissions and fees. I think with Tastyworks, there's a small amount. Like if you did 20 shares, you may have to pay 50 cents or so and some clearing fee or something. But the fees really make it to where we can do something kind of exciting with this. And I don't see that ever going back. I don't think we'll ever, you remember when you make long distance calls. Matt probably doesn't remember this, but you had to call, and you had to dial one and the number. I remember band practice. This is how poor we were, y'all. So I go to high school band practice, and after band practice is over, I'd walk across the street to Grizzard's store, a little rock store, right? You get you a Coke and a pack of crackers. And you walk over there, and here's how I'd let my mama know that it was time for her to come pick me up. I would call my house, collect. I'd make a collect call. You had to use zero and the operator, whatever, to call. I'm going to make a collect call to 748-3576. And mama would hear the phone ring, and she'd pick it up. And they would say, you have a collect call from Bubba, or whatever she called me, or whatever I said in my thing, little Bobby. So she would just hang up. She wouldn't accept the charges because, otherwise she'd have to, pay for the call. And she knew, hey, it was time to come pick me up from school. So I sit there and drink my Coca-Cola and eat my crackers and wait on mama to come pick me up after band practice. Can you imagine that now? Now the kids are calling people during band practice, right? You got your cell phone tied to your trumpet. So you can watch YouTube videos while you're out marching on the field. So times have changed. I don't see us ever going back to that. I don't see us ever going to a point now with Robinhood and Tastyworks and even, TD Ameritrade taking the commissions off of stocks. I don't see us ever going back. So I think this has now made this a more viable strategy. And it may be why this never really caught on with people. Is that they're like, man, that's a lot of movement. Now, keep in mind another thing, if you're ditching losing stocks, right, then you have to worry about wash rules, especially if you're in an individual account. So my account does mark to market account. I'm not an accountant, y'all. God knows I do my own taxes and stuff, but trust me, don't listen to me on anything. But it doesn't apply to me and my account because of the elections that Mr. Green from greentradertax.com, go check him out. He's worth getting a consultation with. The way that I'm set up with my attorney and my accounts, then I don't have to deal with that wash sale rules, the crazy wash sale rules, right? So if you're, let's say, I don't even know how to explain it. If you are selling a stock that you're losing money on, and then you buy that stock back within 30 days, then there's some, hey, they don't like that. So you don't get to count the loss on your stock, wash it. So Google some of that garbage or ask your accountant about it, but it's complicated and well over my head. And I would never advise you about that, but you do need to make sure that if you're unloading a losing stock, not to buy it back within 30 days. And if I butchered that at all, y'all know, You should never listen to me on anything to begin with. I mean, how many times have I told you, never listen to Bobby on anything. I have no idea what I'm doing, you know, and I'm always headed toward a crash and burn somewhere. But I think this has been a good little session today. Oh, Ken says the biggest problem for me is that AIM is boring. You'll need to keep on trading the more exciting trades. I get it. I get it. It is. It's kind of boring, right? The kind of thing that I do like, though, is I like kind of going in and, you know, watching. You know, I got to take action here. If there's anything saying I need to buy or sell or do anything. Matter of fact, I don't even know if my prices are updating. That's another thing you need to watch out for, right? So a lot of times you have to close it out. See, nothing's moving. Nothing's moving. I've got Thinkorswim open. It ought to be moving. Prices ought to be moving, and it's not. So I got to, I think I can go data, refresh all. Let's see if that'll work. See if that'll do it. Jack, squat, crap, nothing. Nothing updated. So I probably got to close it out, open it back up. But you're right. It can be, been at this over 30 years. I still don't know what precisely a wash trade is. 1256 per. Yeah, 1256, you ain't got to worry about all that part. 1256 stuff is good, right? Which means you could add our XSP into this or some of our 1256 contracts. But, you know, so I would encourage you, if you're looking at doing this, go ahead and draw those green monsters on some of our stuff. I went ahead and drew them on everything yesterday. I think I almost forgot how to do green monsters. Let's look at UPRO. Drew a green monster on UPRO. Where's UPRO? It is in the overbought category, right? We would anticipate a pullback here. So it gets, you know, in my formula, it gets punished for being in this scenario. Since you're overbought, the theory is that you're going to come back into the fair value range. If not, if it moves on a little bit further, it'll in an oversold category. So how often do you want to do these calculations? How often do you want to do the adjustments on your thing? I think for most of you, every month, right? You go in here and you go, man, one Sunday, I'm going to go in and I'm going to do my allocation. Just do these numbers. Shouldn't take long, and we'll figure out what I should allocate for the next month. You can do it weekly. Well, you could do it daily. I wouldn't recommend it, but it's a lot of data points to pull in. Hopefully, we can automate it, you know, maybe with everything but the green monster. Heck, I don't know. Maybe one day we'll automate that. I know some people have tried to automate the green monster. That'd be cool, wouldn't it? If we could just open it up and boom, there's a green monster. Now, it's just math what we're doing, right? It's just math. You're going, let's say, top to the bottom, the high and the low on a monthly chart. Then you're drawing from the 50% of that to the point of control. So then you're moving from that to the, you know, 200% line. I mean, theoretically, somebody way, way, way smarter than me can figure out a way to do that as well. So, you know. But
I'm actually working on that.
Oh, Ken, that's awesome. Man, if you could get that green monster automated, then that'd be so cool. Because I'll tell you again, I hear her downstairs. Beth ain't drawing no green monsters. I don't care how dang well the thing works, right? Beth is not going to sit out here with her 5 kids with me going on to the Chili Jordan Tide. She is not drawing a green monster. Beth, you want to draw a green monster? She says she's going to green monster me if I leave this light on again tonight. Here's what I left on last night, y'all. What's this? Y'all know that when we started this, I got these nice little lights that make me appear brighter, right? So I left this one on up in the loft last night, and she griped and grumbled all night long. She's like, Bobby, go up there and turn it off. I'm like, Beth, I can't. I got my CPAP mask on, right? I can't get up there and do that. And she's so mad. And then she woke up this morning. She was still mad all night as that angry old hornet because I wouldn't get up here and turn this out. What, Beth? She said she's throwing it in the swimming pool if I leave it on again tonight. So anyway, I know y'all don't have that problem with y'all's as wives and spouses.
But I'm also the one that gets up at 6 o'clock while you're sleeping.
She's also the one that gets up at 6 o'clock while I'm sleeping, she says. Beth,
Bobby,
stifle yourself, girl.
Bobby, your water streams.
So before we get in an argument, I better cut it off for the day. All right, anyone got any questions about anything? Now, again, I haven't quit trading the other account. The other account's still going, right? We made, let's see, my butterfly yesterday, see, it don't even show up, it's gone, was a full profit. I got a butterfly on there. I think I do. Do I have a butterfly on there? Yeah, it's got 8 days. It's, you know, what, doing nothing? Haven't made any money. Got another butterfly. Oh, that one closed too. I got 2 butterflies that's closed. Got one there. It's up $25, $5. Got a butterfly there. It's up, what, $42. How the income trade's doing. They're up $303. The hedges, they're the ones that's taking me down right on the thing. They're sticking up. But remember, these are verticals. That we're diagonal, right? That we're dealing with. So we're paying those off every week. So everything's going on there. So we might get off of AIM tomorrow and go back to what's going on in this particular account. All right, good job, y'all. Appreciate all you listening and coming in every day. And I'll see y'all tomorrow.